Hi, everyone. Okay, so I see a lot of people are still trading on Anthony's application that we just shared. So you can maybe put this down for a minute and you can continue trading. Maybe there will be more indication of interest to buy and sell on the platform. I think that what we've seen here is really the potential for distribution and liquidity when there's an interoperability network that connects all the blockchains into all the distribution channels, and where a client can buy from any blockchain regardless, and they don't even know which blockchain it is. Even though we wrote it there, it's just for this audience, otherwise it wouldn't even appear. And how clients of different banks, different institutions, buy sides and so on can trade between them seamlessly across this network. So this is just to put this kind of Spotify moment of private markets in your hand, and to show a little bit of the future of what can be done with FinP2P platform. Now, this panel is really about distribution, because I think that it's pretty clear that over the last 3 years of working on tokenization, most of the attention went to the tokenization process, working with the asset to tokenize. But actually, it's a two-sided market. If you only tokenize and you don't have buyer and you don't have traders, you don't have a market. It's a two-sided market. So what we're here to talk about today is distribution. And really, the last time we were in this conference in London, we talked about the asset managers are coming. Today, we want to talk about distribution, and this application that you download is part of this push towards that. So I have here 3 panelists who know, everything that has to be known about distribution, and I want to start by introducing them. So maybe start with you, Milena. If you can say a few words about yourself and your role within US Bank, and then maybe I can ask you a few more questions.
Perfect. Thank you, Ami. Yeah, this is great. Thank you for having us on the panel. I'm Milena Kohlhofer here with US Bank. I lead digital assets for the corporate and commercial bank. I joined US Bank 1 year ago exactly, 2 days ago. It's been a year now. So it's been a great year. Great bank. The people are amazing. My 2 colleagues here, Cynthia and Miriam. If you haven't gotten to know them, please speak with them. But yeah, we're really excited about everything tokenization, especially distribution with Onera. We actually invested in the company, so we're big supporters of the platform. And yeah, we're really looking forward to working with Ami and here with the rest of the industry on figuring out distribution for digital assets.
Thank you. And I know that US Bank is a leader in the field of ESG. So do you think that ESG is an area where tokenization can also provide value?
Definitely. I think ESG is a perfect use case because we all know that tokenization is good on the issuance side on making everything faster, cheaper, better. But on the investor side, it's really all about transparency, in my point of view. So providing the investors with a digital portal where they can access all of these digital assets that they're interested in. If they're interested in impact investing, for example, which US Bank is really big on, we have a lot of client demand, giving them access to a digital portal where they can see all the investment opportunities on, all the environmental and social impact projects. We see that very valuable, especially like providing digital data room on the transparency side. So working with a company like Invenium, for example, that you can connect to the Onera platform and give the investors access to all the ESG KPIs that they're looking for. They can see the real-time use of proceeds data just like at the click of a button. Definitely something that, we see a lot of value in.
Thank you. Oli, over to you. Maybe a few words about yourself and then a follow-up question.
Yeah, great to be on this panel. Oli Harris, on the digital assets team at Goldman Sachs. And help lead our business here in the Americas.
And I think one thing that's everybody knows about Goldman Sachs is that you're really good at timing the market. And in this specific market, it looks like you're quite early. And do you think you're quite early? Is it now the right time to deploy? Where do you see the horizon? What is the timeline that you see realistically for an institution such as Goldman Sachs to be able to be in production with a tokenization solution?
Yeah, interesting. I'm hoping we're not too early. I would say, actually, I feel we're at this inflection point. So, like my previous employer, we started doing digital assets and exploring it back in 2014. And it was only 3 years ago that Goldman Sachs went and actually created like a dedicated digital assets team that then scaled from 4 people 3 years ago now to about 70. We obviously built our own digital assets platform and very active in the space. So I think hopefully now we're at this inflection point, and that's probably due to like 3 key reasons. One is the technology is now fit for purpose for enterprise. We're moving away from experimentation and proofs of concept, and I know yesterday there are many of the same themes on a few of those panels where now is the time to deliver commercial value. The second piece is education and awareness. There's still a ton of work to do, but I would say for all the stakeholders we work with, whether it's regulators, our clients, even within the company, like legal, compliance, engineering, risk, that level of awareness is at a point where we can actually make tangible outcomes and progress, which is non-trivial and obviously took many years. And I think the third piece is the actual opportunities themselves. I think we spent, as an industry, you could argue like nearly 10 years experimenting in blockchain now. And there's been a ton of different use cases like thrown at the wall where like, oh, we should do this, we should do that. To your point, as you open the panel, mainly from the origination side. And I think now the combination of, we know what opportunities are commercially viable, the technology is fit for purpose, and the people and the governance are ready to go. I'm hoping the next 1 to 3 years we're going to move into like business creation and driving commercial outcomes.
Thank you. Thank you. Will, please introduce yourself, and then I'll ask you a question.
These are long intros. So my name is Will Peck. I'm head of digital assets, run our digital assets business unit for WisdomTree. We're a ETF sponsor, kind of well-known asset manager, manage roughly 90-ish billion in assets under management today in the US and Europe. We've been looking at blockchain and tokenization for 3 to 4 years now. I've been in my current seat for about 2. And, big believers in this space, obviously, and, we're actually doing stuff. We've created a series of what we call digital funds, 40 Act registered mutual funds with a tokenized share record, as well as kind of tokenized physical assets like gold. And we're actually creating the distribution channel ourselves on the retail side through an app that we've created called WisdomTree Prime. So happy to touch on those topics.
Yeah, we'll get to that in a few minutes. But what I wanted to ask first is, when you think about distribution, you choose the specific asset you want to bring. So can you tell us first about why did you choose the asset that you actually are bringing to market? And also, I want you to say a few words about your interaction with the SEC on this, because I think this is very unique in the market in the fact that as the SEC actually, it was submitted to the SEC as a tokenized solution, not just for accredited investor, for retail, right? A 40 Act. So why did you choose that, and did you see client demand for it?
Yeah, absolutely. So, anyone who knows the WisdomTree story, so we've kind of been in the market with our ETFs for like 15 years now, and we're kind of a very early advocate for ETFs as being a superior technology to mutual funds, right? For various reasons you can talk about: liquidity, transparency, tax efficiency, standardization. ETFs were better than mutual funds. And so when we began this journey, we were trying to think, well, what could do to what could be this next structure, this next wrapper? And without knowing quite how at the time, we thought, blockchain tokenization, blockchain-enabled finance, whatever you want to call it, would play an important role there. And so we kind of embarked on that journey to bring this forward, which involved, as a regulated asset manager, comfortable with regulation. And key there, we focus on liquid asset classes. So not, reg offerings, reg D or whatever, but like literally like treasuries and gold, like the most liquid assets in the world. So for like the treasury side, the way to do this was to go to the SEC and say like, hey, this is what we want to do. We haven't been the only one to do this. There's been some other asset managers as well. And then effectively, through dialogue with them, other stakeholders created this kind of new prospectus filing that we did, and going through the front door is what we think is important to kind of bring this forward. And our first fund went effective in November, so that was a nice milestone for us and kind of set us up to roll out this year.
Yes, and I think for the audience, you can just Google, WisdomTree and the SEC, and actually see the SEC document with all the mentions of blockchains and bridges and everything in there. Quite interesting to see. So I want to move on to the next question, and the question is about the value for investors, because I think, as we said, everybody were focusing on the value for the assets to tokenize, And a lot of assets we're tokenizing because of efficiencies and making everything digital on their side, on their back end and so on. So it makes a lot of sense for the assets to tokenize. But for an investor, what are the advantages for an investor from a tokenized solution as opposed to the regular way that they buy alternative assets or some liquid assets? And I'll start with you, Will, this time, because I think I'd like you guys to speak also about the non-liquid assets. But give us an example, for example, in a product like Treasury that is liquid anyway. Potentially a client could buy it non-tokenized. So what is the advantage for the client from buying it in the tokenized versions as opposed to the non-tokenized version?
I'm going to say 3 words that will sound very familiar because I just said them: liquidity, transparency, standardization. I think obviously, so Treasury funds exist today, right? You can buy them during market hours. They settle on like typically a T+2 basis. And that works great. Like, that's a phenomenal product. It works very well. I think it's the envy of a lot of the world in terms of how our financial system works. But I mean, we've all seen, like, you could get faster, right? I mean, there's discussion yesterday in terms of, well, should we be moving towards real-time gross settlement, or just giving more choice in terms of what settlement could look like? And I think, as a lot of people have talked about, tokenization and blockchain can be part of the solution there. Not just in and of itself the solution, but like part of the solution there. And we view the, doing digital funds, tokenization, as kind of a first step in that. Transparency, I think we all know that financial transactions have lots of counterparties in there, and then having kind of a clear source of truth is like back to basics of like what blockchain is. We see that being an advantage as well. And then standardization. I mean, one thing that we've talked about is that, it's kind of funny to even talk about it today, but 15 years ago when ETFs were really taking off, this idea that you could access any any liquid asset class anywhere in the world and all you needed was a brokerage account was actually a pretty revolutionary concept. And here we are today, like, what's more prevalent than a brokerage account? It's a smartphone, right? Like, the ability to have any sort of standardized wrapper, be able to access through a wallet you can hold. I mean, there's a lot more to it than that, but like, I think that has lots of potential and power over time. So those are the 3 things that we're focused on. And for us, it's not a back office play, it's a front office play. It's better user experience and trying to deliver financial services to customers in a better way than they get today.
Oli, from your side, maybe you can talk also about other asset classes, like, for example, real estate, the project we're working on.
Yeah, definitely. Yeah, obviously entirely agreed. I think if I was going to sum it into one word, I'd say like utility. So it's like greater utility for investors, and probably give like 3 examples or dimensions to that. I think one is like creating secondary markets in products where there aren't secondary markets today, leveraging the technology. Obviously, your trading demo example prior to this panel is a good testament to that. I think secondly, kind of building on the liquidity theme, but is the ability to do things 24/7, 365. And again, the combination of tokenizing assets and the cash leg and the ability to do delivery versus payment on the same chain means, not in theory, but in reality in these use cases now, you can you're not reliant on traditional payment rails, and you can do things over the weekends. And then thirdly, definitely agree on it being like a front office play. It's about revenue generation and opening up new client types. But I also feel there is an efficiency piece around like streamlining the subscription and the redemption process. So probably that's maybe standardization in your language. I think that is all wrapped up in like greater utility for investors of those assets.
And Milena, where do you guys see? I mean, I understand in US Bank there's great support for this movement. Do you see this as the kind of general future of where things are going in terms of distributing assets, especially private market assets and bonds and things like that, or is it more a technical kind of operation?
I think at first it was definitely more of a technical operation, but we've kind of already figured that piece. Like, we've been working on this for 5 years already, so I think we got the core foundation done and figured out. I think now it's more about the investor experience. So for me, it's more about a seamless user experience for the investor and giving them global access. So breaking down the barriers, giving them access to all of the investment opportunities that could be available to them. So through the network of networks like Onera, they don't have to worry about going into individual marketplaces and individual portals to see all the investment opportunities. So through like an investor portal from US Bank, for example, an investor could log in and then see all of the assets that we could source and curate for them that would be part of the the network, the FinP2P network. So I think for me, that's the most beneficial for the investor.
So practically more valuable even for the investor than for the asset managers in many ways.
Yeah, definitely.
Okay. Yeah, I think we're seeing the same. I think what we're seeing when we're talking to investors and putting those applications on their phones, on their hands, they're very excited to get it. Every focus group that we've done is showing the same. They're getting new access to us that they couldn't before. They can do in a click of a button what they couldn't do, in 3 months. And they can trade, they can leverage, they can borrow against the assets and so on. And I called it before the Spotify moment. It's like, it is the ability to suddenly access and buy, a building at a click of a button. That's not something people are used to. So if we can make that on stage, I think that the investors are definitely are there to gain, and we're hearing it from them in focus groups and so on. So the next thing I want to ask you is about, the hurdles. What are you seeing as the hurdles for this thing that, because we're seeing that the asset managers are already here, tokenizing a lot of assets. You're tokenizing, all of you are tokenizing assets, and we're seeing also the investors are interested to buy assets that are good. And the question about tokenization is not even there, because on an interface like we showed you, tokenization is not even a thing. It's just an application where you buy from your financial institution. So what are the hurdles for making this the kind of the predominant way of buying and selling alternatives and other assets that are tokenized? So if you had to kind of talk about the top 2 hurdles that you're seeing right now, what would they be? And we can start with you, Will.
Top 2, I don't know if I have 2. I think at some level you just gotta do it. Like, I think there's been a lot of, over the past, a lot of these groups of people have been getting together for a long time, right? And I think we've just gotta do it, right? And like actually go out, not do POCs, do live products, try and put into market. And then, you learn by doing that, and you learn from your customers by doing that. So I think it's, at a certain level, it's just time to move past POC stage, and people just gotta come out and put products out there. So I think that's the biggest thing, is just getting past that mental hurdle for institutions.
I think there's something refreshing about your answer, because this question was asked a lot in many panels, and people always come up with the reasons. There's not enough interoperability, there's not enough regulation control, and what I'm hearing from you is, no, we just have to do it, basically. I think that's refreshing, and I like that. Oli, from your side, in a much, much bigger organization, I guess it's a little bit harder to move than, Will has full support from his CEO, who is, who loves the subject, and it's a lot easier within an organization like yourself. Within an organization like Goldman, what are the hurdles that you see?
Don't let him off the hook. You can do better.
Yeah, that's right. No, I do. Yeah, it's interesting. I was just thinking, that aha moment is probably a good one. It's like bringing it, like, it's the so what, like who cares? Like you're just tokenizing assets. What is the actual so what for the end user and the client? And I like that idea of just like, sure, yeah, we're getting things done. I think everyone in this room is doing that. But I do think there is that mental hurdle piece you mentioned, which is like bringing it to that end client, whether it's an institutional client or retail, it has to be relevant for them. So there's probably a bit of like building to show the value, and then there's the user experience piece, because if people are not actually getting the benefits that we're all espousing at this conference, then it's kind of all meaningless. So I think I'm probably in Will's camp, but overlaid with the usual suspects, which is like, we don't want to be building, all these blockchain islands on different tech stacks and having different applications that talk to each other. So I'd say like under the hood, there are all the usual problems around like interoperability, and obviously stakeholder management. And like if you're working in like true distributed systems, we all have to work together. Obviously, to Anthony's point, as he opened his speak on the GDF forum, like if we don't do this in a collaborative fashion, then it's also going to be like super painful.
Yeah, and do you think, Milena, do you see a willingness within this community of the financial institutions to work together on this? Because I think that initially, if you look at it 2 years ago, everybody were building their silos. And in this conference, this group, we were talking about collaboration. Has the mood changed? Are you willing to work with everybody else? Your competitors, for example, about liquidity and distribution? What is the sense that you're feeling within the industry now?
Definitely. I agree with both of your comments. Definitely, I'm in the let's just go ahead and build phase. We've been talking about it forever. We have a plan. I've spent the last year since I joined figuring out the strategy, so it's not like we're just going for it and building it. We've come up with, a very detailed plan, but we're very open to changes because this industry changes very rapidly. So, we have a vision. We're working towards that vision, but we are open and happy to collaborate with anybody in the industry that's aligned with that vision. And as long as we're focused and we're getting, we're building towards that end stage, then definitely we're doing POCs still. So we don't think it's a waste of time as long as it's not a science experiment and it's going to be useful towards the future vision. I think definitely we need to continue, building these sandboxes and testing new use cases, but always aligned with that, greater vision.
Okay, thank you. I think this is the big message that the group that is led by Anthony, the GDF group, is about interoperability. And you're hearing from everybody that they're willing to work with partners. So everybody here in this group that want to collaborate, through us, we can help make these connections, because I think these connections are very, very valuable, because different people contribute different things. But in the end, for liquidity, it's better for everybody to connect with everybody. Now, I want to move on to the next, maybe the last subject that we want to talk about. Is just give you a bit of time, each one of you, to describe to us, within what you can describe, within what you can allow to sell, what are the things that you are actually building right now that people in the audience can participate into and work into and expect to come? Just a sense, again, not putting anybody on the spot, especially things that were already published, but just a little bit more color about them. So, Milena, do you want to start?
Yeah, I think the two biggest projects we're working on at US Bank right now are our DAF, so our Digital Asset Factory. We think that in the next 5 to 10 years, all of the issuances will be digital. So we're moving in that direction. And then the second one is digital asset custody. So we already have Bitcoin custody with NYDIG. We already have support for other cryptos. And we're building towards the tokenization side for digital asset custody.
Okay, so DAF is coming then.
DAF is coming. It's
Okay.
a thing.
It's a thing. Oli, you have a similar acronym.
Yeah, we do. It's funny. I was just reminiscing on your previous points. I was thinking, like, in terms of, we sit in the business, so we actually, we're self-funded, and I think that's like a key point on like incentives. So everything we're doing, if it's not successful, I'll be brushing up my CV and looking for another job. So the time is definitely now, and yes, we shall get building. And I think so what are we actually doing? We're doing a lot, and I think the beauty of our team is we're firm-wide across the firm, and that means we can kind of unlock the benefits of the whole franchise, whether it's investment banking, global markets, asset management, and private wealth. And so as part of that, from a tokenization perspective, we've created what we call our digital assets platform, because we're great at marketing, which we call the DAP. And the key thing about that is it's modular, it's multi-product, and it's multi-jurisdictional, and it's in production and live already. And the benefit of that is we're really looking at the continuum of different assets. And just very simply, like, both on the liquid spectrum with all the benefits that Will was espousing, but also to other, assets like alternatives and private markets, where, again, you think about the different benefits using the same technology, i.e. around creating secondary markets, the ability to redefine that asset potentially as like HQLAA, and then the ability to use that as collateral, and the collateral mobility piece is another really interesting play for us. So that's kind of what we've built. And again, to those points, we're doing this in partnership because it's a must-have. We have to work with partners in an open architecture fashion, and trying to be as best as possible technology agnostic, because again, the key part of this is giving us and our clients and users of the platform, optionality.
Great, and Will, so we have DAF and DAP, and you have Prime, right?
Yep, WisdomTree Prime. So that's the, like I said, one of, and right now the only distribution channel for these digital funds, tokenized assets that we've created. Been working on it for a number of years now with technology partners, Securrency, and also our fund services providers like State Street has been a big one as well. So we've been doing beta testing for about 6 months now, getting lots of feedback from that, kind of making some tweaks, improvements, operational testing, and then we're exiting beta this quarter. So people can, depending on what state you live in, we're about 25 of 50 states, be live and can sign up there and just actually interact with tokenized assets.
And where is it active now?
It's active 25 states, so it's some of the big ones like California, New Jersey, Illinois. New York, as everyone knows, is a little bit of a different animal, so you should all be rooting for us. Yeah, but it's it's in those states and others.
Sounds great. Okay, so we have the panelists here, and we have a short few minutes, so I just wanted to open up for questions for the panelists, please. So anybody?
I have one question. When you spoke about the fact that people aren't used to the fact that they could buy real estate with the click of a button, we saw what happened with Wall Street Bets, Robinhood a couple of years ago. We saw what just happened with Silicon Valley Bank with a couple of messages from Peter Thiel running the bank. What type of risk mitigation do you think these systems will need in order to prevent speed bumps, something like that, to not have your real estate portfolio drop by 50% because a message spreads and social media picks it up and then everybody just sells tokens on a whim? What do you see of risk mitigation?
I can start answering you, and maybe someone from a panel can join. What we're doing in the real estate space is we're taking institutional grade real estate that is now being sold mostly to pension funds, and we're making it more available to audiences, but still within the regulation. So it's not going to go retail. It's going to go to accredited, it's going to go to family office, high net worth individuals and such. And it will be things that they could potentially, they could buy today that they just didn't have access. Everything stays until inside the existing regulation structure and this existing regulated model. And I don't expect any of it to start trading like high frequency trade. It's not going to be Tesla. But what we're seeing in this market today, in the real estate institutional market, is that there's no liquidity. Liquidity is zero. It's very hard to find a buyer. If you find a buyer, you have to sell the whole thing, and then you have to sell at a big discount. So you only invest if you can buy for 20 years. So what we're trying to do is move the needle from 0% liquidity or 0.1% liquidity to 5% liquidity, 10% liquidity, which means that you can sell, which also means that you can borrow against it. You can borrow money against your real estate and keep it as collateral. So now you have, instead of an asset that you had to buy at a big ticket, stay on it and couldn't get any liquidity and couldn't get any leverage, you can now buy a smaller ticket. You have the ability to sell and you can have the ability to leverage it. None of it has to do with the behaviors of markets that are highly traded and frequent and so on. It's just a way to take a very analog market and make it digital so people can make their activity faster and more efficiently and grow these markets as well. But we're not getting even close to these areas where the risks that you're talking about are, and even if we did, the level of transparency that is available in the market is very, very high. Like, for example, in the real estate project we are doing, there's actually basically a marker from Cushman on the asset every quarter. So people know the real asset. So even if people are selling at a discount, it's just an arbitrage opportunity. So I'm a little bit less worried on this area. Obviously, we'll be more, we'll have to pay more attention when we get to the stages when we tokenize things that are much more high frequently traded.
Yeah, just to add to that, so we're not really changing the investor base or the product base. Everything stays the same. The clients are the same. The products are the same. It's just going to be more streamlined, so we're going to be able to issue assets faster, and we're going to give the investors access to more products because we'll be able to issue more products. And, KYC, everything is still the same. Nothing changes. It's just that instead of hiring an army of salespeople to sell the products, we have, a digital marketplace. That's the only difference.
One more thing, and then you can have transparency on top of the information that is not available today. Like, for example, working with companies like Invenium, to create a data room that is tethered to the blockchain, and you can see the data and it's real and you know nobody touched it. So people are going to have data at a level that they didn't have before attached to the token. So things are going to be much more favorable for the investors.
Yeah, I would just say, yeah, entirely agreed. And a lot of the work we've been doing, especially in the collateral mobility space, is around risk reduction and actually using the technology to help with like intraday liquidity and funding. And actually, I think there's a strong risk management piece for many of the points mentioned. However, there is going to be market structure change and like operational and people process change, which we're all going to have to work through, and especially on the 24/7, potentially 365 dimension. Because again, we'll be in a world where there's no cutoff times, assets are programmable, they're pledged in different places, it's more automated. I think one of the reasons I'm optimistic is like you're blending the human expertise of everyone in this room and Wall Street and traditional finance with this new technology, and it's not crypto, it's not bearer assets. You can bake in from a technology perspective a lot of those controls. So I'm optimistic for a world where we can unlock a lot of those benefits while using the same technology to like mitigate, what happened in DeFi, last year with, it's all programmable smart contracts, and you can have flash crashes real time with no safeguards.
Any other questions? How are we on time? Can we have another question? Yeah, go ahead.
Yeah. So for registered funds, right? What is about distribution? I'm pretty loud, but what is the concrete benefit, which I still don't fully understand, to put registered funds onto the chain? Okay, everybody has a phone, but I can open a brokerage account. I can go on, Robinhood and be trading in minutes. I can get access to every single ETF out there. Nobody's charging commissions anymore for ETF trading. Like, what is the concrete benefit to an investor to access a registered fund?
I'll point to two quick examples. So one is just like native peer-to-peer, right? Like the ability to be able to send natively an asset to like somebody else in the network and be like, oh, why am I doing that with like my S&P 500 ETF? It's like, well, maybe you don't want to do it with that, but you might want to do it with your money market fund that's yielding 5% today, has no kind of much different counterparty and custodial risk versus something you might have with like a Venmo or a stablecoin, right? So like that's one example. Another that I'd point to is connectivity natively with like payments rails. I think it's interesting to think about, some people look at Bitcoin as like an investment. Other people say, it's like a payments vehicle or a payments rail for me. I think there's a lot that comes from doing this all natively on one rail, the payments and investment tech stack. So removing that need to kind of sell it, wait 5 days for it to move and transfer, will actually unlock a lot of benefits for people. So those are two very specific things that I'd point to.
Yeah, I just totally agree with that. Just build on the last piece. For me, it's all about collapsing value chains. And so you can use the same network for multiple assets and different use cases in a programmable fashion. And I think that's like where we'll trend to in the next like 5 to 10 years. And that's where you actually like unlock real benefits, not just like, tokenizing one fund in isolation. Obviously, that's like an incremental improvement, but it's when you get the network effects that you actually start getting some real benefits.
Okay. We're good? Yeah. Thank you very much. Thank you, the panelists.